All right, we see weakness in crude oil today as it breaks down from a potential bear flag pattern and reaches a 6-day low and is likely to close weak the low or at a 6-day low. But before we go further, a quick word from our sponsor. This video is brought to you by XNest, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire taking a look at the daily chart for crude oil. You can see that both the bear flag highlighted with these two blue parallel channel lines, and it's sitting right at support of this trend line here, which is the bottom of a symmetrical rising parallel trend channel. So this is a double breakdown if it follows through. It's a breakdown of the bear flag and a breakdown of this rising channel. Right now, it's a potential breakdown. We still need further confirmation and so forth. But it's looking bearish, except for the fact that the breakdown day, which is today, is a very narrow day. There's no downside volatility. There's no upside volatility either. So where does that leave us? That means that a rally above today's high, 67.41, could see a bounce back into this range, maybe up to test resistance at the 20 moving average. Currently, the purple at 68.47. Well, breakdown below today's low, 66.50, targets the next support zone, which is this orange 50 moving average, down to the neckline. So that's 65.74 down to 65.32. This is the next line of a 1-2 double bottom. The interesting thing about this flag is that there are two signals, so there's a breakdown of two patterns if it triggers further, and it's following a very, very, very sharp, aggressive sell-off, which is the pull of the potential bear flag. Moreover, you can see that recent rally completed at the 38.2% retrace, Fibonacci retracement, which is generally the minimum anticipated, and that resistance is also seen at the blue 200 moving average and the purple 20 moving average, and the 20 has recently turned down after rising for a while and going flat as well. And you see it hasn't gone flat here and just crossed below the 200 moving average. So there's a bunch of bearish signals and signs lining up here in crude oil right now. Failures are always an option, and that would happen on a continuation to the upside. But right now, it looks like further downside for crude. One final note, the initial target downside is a 61.8% Fibonacci retracement at 64.50. But that's assuming that volatility doesn't accelerate on the downside and push price right through there. But you can see how the 50 orange was reclaimed back here in June and tested generally as support here and now being tested again as support. So it's a big deal if it does not hold, but it could hold, and that would potentially negate the possibilities from this bear flag. So we have a number of different dynamics that are kind of fighting each other right now. All right, that is it for crude oil traders. Have a great week.